Thank you for tuning in to episode 253 of This Week in Real Estate, the T-Wire podcast broadcast live Wednesday, November 8th, 2023. Did the courts crush real estate? There's more looming. This episode was brought to you by viewers and listeners like you. There's no way for you to give me money yet, unless you can find my Venmo somewhere, which that's fine. But instead of giving me money, what I really want you to do is just share the show. Send it to someone in real estate that you think might be entertained or either educated by the news and stuff that we cover today, whether it's in an investor, lenders, title companies, real estate agents. Shoot it to them and say, hey, what do you think about this? And if you are watching live or listening live, you can actually join YouTube, Facebook, and LinkedIn and make a comment. And I could display your comment and talk about you or your comment. There's Dusty. She beat LaMarche. Yay. Matt LaMarche has not been first in a long time. I think that guy has gotten really busy. Olivier is also here. He just said he's here to beat LaMarche. Be second to Dusty. Thanks for joining. And all throughout the show, I'll be going to your guys' comments. Now, normally we also broadcast in Clubhouse, but Clubhouse has changed so much that I can't find the frickin' room. So if someone is a moderator in that room and wants to find it and launch it, just send me a little invite. But I can't find the room, so I don't know what's going on with Clubhouse. We'll look into that. Hopefully we can get that up by the end of the show. But we got a ton of news to cover today, and the whole reason why we do this podcast is so that you can have one place to go to know the latest happenings of what's going on in our industry so that you don't have to crawl through the news. I'll do that for you. And we're going to talk about it live. So I'd love for you guys to join the show, join the conversation, pop down in the comments, tell me where you're watching from. Tell me what market you serve if you're a real estate agent. Tell me who you are. And thank you guys for joining. We're going to hop right to it because we have so many news articles to cover today. It's kind of insane. But that's because it is also earnings season. So we have a lot of Q3 earnings reports to go through. But before we get to that, let's get to this lawsuit. And I wish, did I put that on the board? I changed my board for Halloween and I may have taken off yes, I did. I took off the court sounder that I had on there. Dadgummit. We're back in court today. Briefly. We're not going to go into depth like we have in the last couple of weeks. But I did want to cover this article that says that the title is Sitzer Burnett Plaintiffs Attorneys in Talks with the Department of Justice. What in the world does that mean? We've known the Department of Justice has kind of been out to get NAR for a long time. As a matter of fact, they kind of went back on the original agreement that they had with NAR. So this article is on Inman. It says the U.S. Department of Justice and the attorneys for the home seller plaintiffs in the Sitzer Burnett antitrust case have entered into, quote, very significant and ongoing talks with the aim of shaking up how real estate industry operates. Lead counsel Michael Ketchmark confirmed the Inman exclusively on Monday. So here we have shocked the world. Or shocked NAR. I don't know if a lot of agents were shocked. I kind of think a lot of people thought this would be the case. This is how it would roll out, especially when presented the way it's presented in front of the jury, especially given the testimony that they had and the characters they had on the stand. I think a lot of people just kind of assumed this is how it was going to roll out. Well, that guy who just won the court case turned around and filed another suit on behalf of plaintiffs against EXP, Compass, Douglas Elliman, a couple of other companies similar to this one. And there's still a $200 billion lawsuit that's going to be trebled, is the word they use, to $600 billion as a result of the ruling, if it's passed. And now Ketchmark is in talks with the DOJ, and he said, quote, we're in alignment with what the Department of Justice wants. To make real estate part of the, quote, free market, unquote, and to get NAR out of, quote, the rigging system. He went on to say, we think it's a real opportunity for change. So, real estate agents watching this now, what are your thoughts? For me, I think we've seen this coming for a long time. I mean, the DOJ even tried to change the settlement that they originally had with the NAR, going back on the agreement. NAR tried to push the courts to say, no, you have to stay with your agreement. I don't even know what the status of that is, if that's already been passed, if that was agreed to or what. But we have this next lawsuit the $200 billion one, which will be $600 billion starting in January. And from the looks of things, it doesn't look real positive for the National Association of Realtors or real estate agents, how they currently operate in most states. And it is a bit of a state-by-state case. You know, my mother-in-law asked me about it. And she said, what about this case I saw? And I said, well, in some states, it's confusing how people get paid and the proper disclosures aren't there. And so they sued because of it. I mean, that's pretty much it, right? So if the proper disclosures are there and all parties sign off on that, then that would be fine. I still think the huge miss was when the plaintiffs are using all the trainings of how real estate agents should keep their commissions, instead of just saying over and over and over, they're independent contractors, they're independent contractors, they're independent contractors. I feel like they should have said, hey, because we are training agents on how to keep their commissions, it goes to show you that all those commissions are negotiable. Because the entrance of companies like Rex and other discount brokerages like Redfin, which Redfin is in on the other suit, which I don't know how are they in on the other suit? Obviously, they're not playing the same game as everyone else because they're discounting their commissions. But you have other discount companies out there because of that discount, because of those companies being available, and also they are members of the NAR. It's obvious that there's no conspiracy. But for whatever reason, that wasn't argued. Maybe it was kept out of court for some reason. And maybe that's why they want to win on appeals. Who knows? Dusty Martin says, they rig stuff, but commissions aren't part of that. But we do have to pay them to not represent us or be allowed to work in our own market because we won't have MLS access if we don't. It is forced it's not forced that you have to be a member of the NAR here. It's forced that you have to be a member of a local board. And in order to be a member of the local board, you have to be a member of the NAR. So that's how it is here. So we'll see where this goes. It was breaking last week. It's just going to be interesting to see how they team up with the DOJ and what's going to happen. Of course, Mantil Williams, he's the spokesperson for NAR. He said the cooperative compensation practice makes it efficient, transparent, and accessible marketplace possible. Sellers can list their home for more, have their home seen by more buyers, while buyers have the choice of homes and can afford representation. I was having some other conversations with real estate agents after the lawsuit last week, and some of them were saying, it's kind of like people are biting the hand that feeds them a little bit, because in the future, especially in this litigious environment that we're currently in, if a buyer goes to a listing agent and says, hey, I want to put in an offer, the listing agent's going to say, okay, put in the offer, get with your attorney and let me know. And the guy's going to be like, what do you mean get with my attorney? Why do I have to get with my attorney? And do you think that for half the commission, especially, that listing agent is going to take on the responsibility of a buyer's contract? I just don't see this happening. And take on the responsibility of whatever that buyer wants being input into the contract perfectly and correctly, and disclosing to the buyer that I know I wrote this up for you because you don't have access to these legal agreements, but because I wrote it up for you, you can't hold me liable. No, that's going to be some court cases. So do you really think a listing agent is going to be like, yeah, I'll write it up for you? No. I think most listing agents, most brokerages will probably instruct the listing agents not to write those offers up and to make sure that the buyer goes and gets their own representation, whether it's an attorney or some other agent. So I can't wait to be sent offers from printouts online. LegalZoom. Make an offer on a house for $10. Oh man. Dusty says, yep, it's a Ponzi scheme. We have a local board, state board, then NAR. They're thrice removed from my business. Good word. Good thrice. Throwing that around today. All right. I still haven't had anything. So side note, I'm having an issue with Clubhouse. And I have a chat of Clubhouse friends. I can't find the Clubhouse room. I'm not sure what happened. I'm not sure if it was deleted from so in Clubhouse, they've made so many changes that now the group we had that was called the Real Estate Agent, what was it called? The Real Estate Agent Network. It was nice and orderly, and you could go into the Real Estate Agent Network and there would be a room listed every single week We would click on that room and then broadcast every week. It did the same thing. And today I open it up and the room's not there. And I have no idea what to do to get it there. I don't even know what I'm supposed to do. I might just broadcast randomly. But I'm not even sure how to start just a random room anymore. Let's see if I can do this. No. So if you know what's going on, if you're a Clubhouse expert, holler at your boy. Because I'm pretty technologically advanced, I would say. I mean, I use AI. As a matter of fact, I love the thumbnail that we had today too. Because the thumbnail was generated with AI. I put myself in front of it, and then I put shards of glass breaking. Check this out. So for the audio listeners, it is a house that is like slammed to rubble. Slammed to rubble is not the word I'm looking for. It is a house that's like just completely destroyed. And there's a judge's gavel on top of it. There's some smoke coming up from where it was just obviously smacked. And then the whole thumbnail is just broken glass, and I'm behind the broken glass. I thought that was pretty creative. I'm loving this thumbnail game, but that's beside the point. I can't figure out the Clubhouse game. And well, there it is. It just showed up now. This is so weird. All right, let me see if I can take it live. No, it's not letting me go live now. I have no idea what's happening here. I can't enter the room. I can't enter. Oh, no, that's not entering the room. That's seeing a list of people. So I'm not sure what's happening. I'll get into these other news articles in just a second. I have no idea what the problem is here. Oh, it's showing November 15th. So today's November 8th. That's why it won't let me in. I don't know what the problem is. All right. Well, I would create another room in there, but I can't even do that these days. So that's the Clubhouse struggle that I'm in today. If somebody wants to start a Clubhouse room and invite me, I'll broadcast this whole thing in your room just for funsies. I feel like I need a fail song. Where is it? Oh, there you go. This is how I felt about my Clubhouse woes today. All right. Thank you for the people that are staying with us live here. Olivier says it looks like a freaking mess. Time to overhaul everything instead of having each company decide what the agents can do. But that's the problem, though, Olivier. What they're saying is if you have a big group of people that decides what the agents can do, then it's not the free market. That they want it to return to where all the companies. Well, actually, they don't even want the companies to decide what to do. They want each individual agent who is an independent contractor, as Gary Keller said so many times. They want all of those agents to be able to decide what to do. So I think it's going to be the exact opposite, Olivier. It's going to be the lack of rules and lack of regulation. It's going to open it up. Sandy said, they said the time change deleted everything on Clubhouse. Seriously. So it's not me? Thank you, Sandy. Sandy, where are you from? Thank you for that information. That's so wild. Yeah, but does Clubhouse still have a back button? Does it? I don't know. Apparently it needs a fallback button. So yeah, it's showing me next week's event, but it's not showing today's event because of time change. That's so wild, man. I don't know what's happening. But thank you for that information, Sandy. Oops, I keep hitting the button. Let's see. Olivier said here in Canada, the government makes a general rule and we have to follow them or else it becomes the far west. I think I mean the Wild West. He said, so happy to be up north. So the government regulates commission incomes for real estate agents, Olivier? Is that what you mean? Interesting. All right, so let's get into this next article. Oh, here she is. Sandy said, Forest, Virginia. Earlier rooms had the same problem. Thank you, Sandy. A wealth of information. All right, so NAR. What happens if the clear cooperation goes bye-bye? Well, these analysts say NAR is going to shed 1 million members. Dun, dun, dun. I don't have that sound effect anymore either. I really need to put some of these sound effects back on the board. I've been doing other things with the board. I need to get them back. That's fine. I have this one. That's kind of apropos to what we're talking about. Okay, so the NAR, this analyst says it's going to shed 1 million members if the clear cooperation policy goes away. The analysts are Keefe, Burnett, and Woods. They told investors in this report that it's very likely the cooperative compensation, whereby listing agents share commissions paid by home sellers with their buyer agents, will be banned in the near future. He put the odds of that banned on a cooperative compensation at 50% for the Sitzer Burnett lawsuit and 75% for the lawsuit known as Moehrl. That's Moehrl. That's the $200 million one. So they're putting a higher chance on that one going through. Interesting. Quote, we believe that disruption to the industry's commission structure is all but guaranteed, KBW analyst wrote. While the disruption should improve consumer transparency around commissions, which economic theory suggests should reduce housing friction cost, the key question is whether disruption actually changes anything in practice. Given the possibility of such drastic shifts coming to the industry, KBW analyst said that they wanted to provide investors with a playbook for how to approach publicly traded real estate companies. So these are industry analysts for stocks. I guess they only put Sitzer Burnett at 50%. I guess that report was done before the court case came out and it went through. The other one they're more confident about at 75%. And that's got to be not good news for the real estate companies involved in that one. Now, this is an interesting aside because you are talking about investment. There's a lot of publicly traded companies, including Zillow, which we're going to get to Zillow's Q3 revenues in just a minute. But Zillow has this Zillow Flex program. And the Flex program, it takes 35% or to 40% now of the commissions. So those 40% of commissions, when it takes that, but now the buyer agent commissions don't exist and they have to be negotiated. I mean, this is going to be a whole mess for the companies that built themselves on a referral basis of commissions that now are going bye-bye. So I think it's more harmful to those companies that built their business on the platform of taking real estate agents' commissions than it is for the real estate agents actually who may start doing flat fees and may start trying other business models. Yes, Jack, no Clubhouse today because the time change messed it up, man. Sandy said Ginger Walker figured it out. I love Ginger. All right, so let's go to the next one. So the next, I've got like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10-ish Q3 reports. We're going to hit them really fast. First up is Zillow. Zillow's Q3 revenue ticks up. Losses shrink despite a rough market. So they're making more in revenue, but they're still losing, even though the losses are shrinking. In total, the portal giant brought $496 million in revenue between July and September, according to the newly published Q3 earnings report. That's up 3% compared to the third quarter in 2022. The report also reveals that the company suffered a net loss of $28 million. That too is an improvement over the third quarter of 2022 when it lost $53 million. Yikes. And over the prior quarter where they only lost $35 million. So they brought in $496 million and they only lost $28 million. Is this not, I mean, this is like insanity. Really? So you can read the full report at Inman. I'm going to go to Offerpad. They're the iBuyer. They reported Q3 earnings Thursday with revenues declining 71% year over year to a $234 million. They dramatically slimmed their losses and is on track to reach an adjusted EBITDA profitability by 2024. So it had it only lost 20 million. It brought in 234 million, only lost 20 million, despite continued difficult macro environment, they said, that tanked several competitors, including Zillow Offers, Redfin Now, and Anywhere's Real Sure. Offerpad's performance was on a downslope compared to Q3 in 2022 when the company was still in the midst of buying and selling boom. Company revenue declined 71% year over year from $821.7 million to the adjusted EBITDA. It declined 79% to $64 million. All right, so not good news, not great news for Zillow. They trim losses. Offerpad, not great news for them. They trim losses. Opendoor's in the mix. Opendoor can't hang on to profitability as Q3 revenue caters. The iBuyer saw revenue fall 71% year over year, similar to Offerpad. The company also lost $106 million, a reversal from Q2's net profit. So if you recall, we did report that they were profitable in Q2. They've just tanked all that. It is an improvement over the third quarter of last year when Opendoor nearly lost $1 billion. Part of that loss had to do with the adjustment to the value of homes in the company's inventory at the time. However, Opendoor managed to turn a profit of $23 million in the second quarter of this year, though the Q3 results were dismal. Redfin posts a profitable Q3 despite another quarter of falling revenue. The company posted profits of $98 million, up 8% from the third quarter of 2022, while tallying $269 million in revenue, which is a decrease from 12% a year ago. The Seattle-based company was up 8% from the third quarter of 2022. Profits for real estate services clocked in $54.1 million, which is a decrease of 2% year over year, according to the data. Net losses, meanwhile, fell $19 million for the quarter, compared to a loss of $90 million in the third quarter of 2022. So they're also trimming their losses there. They're hoping to be more profitable soon. RE/MAX. I mean, this is not pretty so far. RE/MAX sees revenue decline for the fifth consecutive quarter. Amidst difficult market conditions, the real estate franchiser's total revenue was down 8.7% year over year to $81.2 million. Coming shy of analyst expectations, the company also suffered a net loss of $59.5 million. Third quarter of 2023, the revenue ticked down for the fifth consecutive quarter. I'm trying to find any other significant numbers in here. Adjusted EBITDA declined 15% year over year to $16.7 million, and adjusted earnings per diluted share were 0.40 cents a share. All right, so not good news for RE/MAX. So far, this has been all not great. Compass. Now, remember, Compass had a bunch of layoffs last year, so surely they would start to be profitable now as they're not paying as many people. Compass trims losses to improve cash flow despite Q3 revenue dip. The brokerage saw revenue fall 10% year over year, but managed to cut losses from $150 million in the third quarter of last year to only $39 million this time around. It's just insane. In total, the brokerage earned $1.34 billion in revenue between July and September of this year, but that's down 10% compared with the third quarter of 2022. Despite the revenue dip, however, Compass did see a number of their other metrics improve in a positive direction. Perhaps most notably, the company reported a Q3 net loss of $39 million, which represents a significant improvement over last year. So they're losing less. Compass also had a positive free cash flow of $12 million, operating cash flow of $15 million. It remains on track to be free cash flow positive for the entirety of 2023. Okay. Here's another one. Douglas Elliman. Elliman posts mounting losses, declining revenue in Q3. I haven't really seen a lot of earnings reports on Douglas Elliman, so I wonder if they're being covered more now because of the lawsuit that's pending. Douglas Elliman reported slipping revenues and growing losses in the third quarter of 2023 as the brokerage continued to contend with negative market forces affecting the real estate market at large. Reported consolidated revenues of $251.5 million during the third quarter, a drop from the third quarter of 2022, where they logged $272 million in revenue. The firm reported a net loss of $4.9 million. That's up from a net loss of $4 million in the same point last year. Year to date, the company reported consolidated revenues of $741 million compared to $945 million in the prior year. Seems like everybody's down. Everybody's down. Everybody's down. Everybody's down. Oh, wait. Not everybody. EXP. EXP maintains profitability as revenue declines 2% to $1.2 billion. EXP World Holdings revenue declined 2% annually to $1.2 billion in the third quarter. According to a call on Thursday, the company held on to its profitability with a net income reaching $1.4 million. Wow, this is this is wild. You run a company that does $1.2 billion and you make $1.4 million. Not great margins. The company's adjusted earnings before taxes, interest, depreciation, and amortization increased 53% year over year to $19 million, and gross profits declined 10% annually. Oh, here's the gross profit. Okay, to $83.6 million. Despite the decline in revenue, the holding company maintained profitability, 70% change from Q3 2022. The declines in revenue and net income were primarily attributed to a slower market environment. They have their transaction numbers with 139,480 transactions, just 1% above Q3 in 2022. Meanwhile, transaction volume tumbled 4% to 48.5 billion. So that shows you, so they had 1% more deals, but the volume of the deals was down 4%. So the value of the homes sold were on the lower side of the market by comparison to last year. Jack Atteridge says, bring on the disruptors. Clubhouse was a disruptor. Then they got disrupted by a time change. Olivier said they could just ask top producers to increase the splits and they would turn a profit. Yeah, a lot of these companies may be rethinking their splits. Anywhere. Here's another profitable company. Anywhere, who also had a bunch of layoffs last year. They tallied another profitable Q3 despite a revenue decline. So Anywhere Real Estate reported revenue of $1.6 billion and a profit of $129 million for Q3, ending with $151 million in cash equivalents. That's the world's largest franchisor, by the way. Century 21, Coldwell Banker, Better Homes and Gardens, etc. The company ended the quarter with cash on cash equivalents, $151 million, and free cash flow of $95 million. Anywhere led through difficult housing market to deliver considerable profitability and achieve substantial debt reduction. And they also, now looking back, they're like geniuses because they took the settlement. Has that been okayed yet? They had the $83.5 million payout settlement that they're hoping sticks. Anywhere says it reduced its debt by $281 million during the third quarter through debt exchanges, bond purchases. Let's see. The company predicted a full year 2023 transaction volume would decline 15%. Interesting. Okay, so we had two profitable reports so far. EXP, Anywhere, everyone else lost some money, including Zillow, Offerpad, Opendoor, Redfin, Remax, Compass, and Douglas Elliman. We have LoanDepot. They did their Q3 report. The big news out of them was that they announced layoffs. They said more layoffs are coming, but it's not going to be as bad. Irvine, California-based mortgage lender announced Tuesday that it would manage to trim its losses for the third quarter and keep plenty of cash on hand despite the slight drop in mortgage originations and revenue from Q2 to Q3. LoanDepot reduced its Q3 loss by 31% from the previous quarter, $34 million, even as revenue contracted 2% from Q2. And then Rocket Mortgage, another lender, but they also, now they have this referral brokerage that may be also in the numbers of Rocket. They said cost cutting helped Detroit-based mortgage lending giant rack up its second consecutive profitable quarter, but $61.54 billion. But at $61.54 billion, 2023 mortgage originations are down 46% from a year ago. Wow. Rocket reported third quarter net income was up 20%. So that's good. They're more profitable, even though the originations are down. And we know, I mean, for a lender, yes, they're looking at mortgage originations to purchase a new home, but they're also looking at refi. Refi is way down compared to what it was last year. And then the last report we have is Airbnb. So Airbnb made waves it was at the beginning of the year where the CEO came out and said, hey, there's going to be much more competition in the short-term rental space, that a lot of people have bought the short-term rentals, and we're going to see the inventories of short-term rentals increase, which are going to lower the cost of these short-term rentals and be really great for consumers. Meanwhile, I'm thinking, well, people that bought those as investment properties are going to have to adjust their earnings because now they're going to be making less than they thought they would. Well, Airbnb pulls in $3.4 billion in Q3 on a strong international demand. So Airbnb's total third quarter revenue grew by 18% compared to a year ago to $3.4 billion, showing that the leading short-term rental platform is still riding a wave of strong travel demand. The increase was driven by a near equal jump in gross booking value, or the total amount of money generated for the company and its host. Gross booking value grew by 17% year over year to $18.3 billion. This is the CEO, Brian Chesky. He says, what we've seen is that our penetration in the US is significantly higher than our penetration in many other countries. The average price of a book tonight on Airbnb actually dropped 1%. So it wasn't a huge drop given the more listings. The active listings grew 19%. So they did have a huge surge in listings, but it wasn't a huge drop in the revenue to host or to Airbnb itself. So we'll see how that continues to play out. That just means that the demand for Airbnbs and short-term rentals was much higher than I anticipated, and I think a lot of other economists too. All right, so that was the industry tea. That was a lot. Thank you guys. I mean, I'm seeing the numbers, and a lot of you are sticking with us, and that's pretty awesome. Thank you guys for sticking with us through the Q3 reports, the earnings reports. But what we're seeing is a trend that a lot of real estate agents are struggling. A lot of real estate companies are struggling when the market moves down. And those companies that are being successful right now are very efficient. They're efficient on the back end of their systems, anywhere, making some moves with big monies and bond markets and such. They're making some smart moves as a company, but those that seem to be just relying on the market are going down as the market goes down. I think everyone's stock has been down lately. I have a stock tracker on my phone. It's been all red lately. Hopefully that starts to turn up. Who knows with all the lawsuits and everything that's left. Another thing that's impacting these lenders, though, this report from Redfin came out that said 1 in 3 home buyers are paying all cash. Oh, wait, before I get to that, Olivier said, surprising Airbnb is doing so well because of all the new legislation. Is that there is a lot of new legislation in some parts, but they're fighting it. There have been people that have said, hey, this rule didn't exist when we were here, so now we got to be grandfathered in, that kind of stuff. We'll see. Dusty said the market goes up and down. I had no idea. Are you making fun of me? Don't make fun of me. We do make fun. There's a specific reporter that always says these reports. I've stopped featuring it because I felt like it was just a waste of time. But it was someone, I'm not even going to say what outfit they were, but every time they reported, they were like, so we're going to see this week if the market goes up or down. It's going to do one of those things for sure. It was like that kind of report. And we're like, come on, man. Like, give me something good here. Jack says, I'm seeing the local broker owners of mid-sized firms looking out for buying opportunities. Interesting. I'm seeing teamerages fold into larger brokerages that allow them to do their own branding and marketing, like Real and EXP and some of those others. The agency, seeing some groups being bought out by the agency as well. So I know there are a lot of companies seeking shelter. All right, 1 in 3 U.S. home buyers are paying all cash. It's the highest share in nearly a decade. So this report's from Redfin. I'll show you the chart on this thing. You can see the share of homes bought with cash hits a 9-year high. And this was bound to happen. You know, as interest rates hit like a 8% rate, you're going to have more people that's like, well, I'm going to leave my investments over there. I'm going to maybe take out this that I'm earning here. I'm definitely not going to borrow at 8%. I'm just going to use my cash. And they're definitely not going to sell the stuff that they're holding at 2.2, 2.5, 2.3. They're not going to sell those investments or properties. So what are they going to do? They're going to use cash. The data in this report is from Redfin across 40 of the most populous U.S. metropolitan areas. It goes back through 2011. So it's the highest in a long time. The weekly average 30-year fixed rate hit 7.2 in September. In October, it hit 8%. High mortgage rates are exacerbating inequality when people who own homes and people who don't, said Redfin senior economist. Home prices are roughly 40% higher now than before the pandy. Home buying boom and the soaring mortgage rates have made the divide even bigger, adding more to monthly payments. Affluent Americans are the ones who can avoid the sting of the mortgage rates. Plus, they're spending less on housing and keeping the money in the bank because they're avoiding interest payments. Meanwhile, those who are sidelined by high prices and rates not only can't afford a home now, but they're not building wealth through home ownership in the future. Melissa Mara said her last 3 buyers were cash. One pulled from retirement, and the other 2 had it straight up. I think we're going to see this more and more and more. But not only in the small markets, we're going to see this in the luxury home market too. So a following report from Redfin shows that cash is king even in luxury. Check this chart out. Cash is king. Luxury home prices are outperforming as affluent buyers dodge high mortgage rates. Luxury home prices grew nearly 3 times faster than non-luxury prices. Isn't that interesting? The median sale price of U.S. home rose 9% year over year, 1.1 million in the third quarter, while the median sale price of non-luxury homes climbed 3.3% to $340,000. Both were at the highest level of any third quarter on record. So luxury home prices are climbing faster because the people who do want to buy them have the cash to buy them, and they are using cash to purchase them and not a loan. So they're not impacted by the negative rates, so they're okay paying a higher price, right? I think that's a pretty quick summation of what's happening. So it ends then what Barbara Cochran, if you don't have high mortgage rates, then you have an environment where more people are willing to purchase a home and they're going to be buying the home, which is going to increase the prices. That's happening in the high-end luxury market because they're not using a loan. They don't care about the 8% rate because they're just using cash instead. See, Barb, she was right. Corcoran? It's okay. But there may be hope. This news came out today. Mortgage rates plunge and demand is finally back. Yay! Real estate agents, we're going to make some money in the fourth quarter. Maybe. The average contract interest rate for a 30-year fixed mortgage with conforming loan balance of $726,000 or less decreased last week to 7.61% from 7.86%. That's pretty significant. Last week's decrease in rates was driven by the U.S. Treasury insurance update, the Fed striking a dovish tone in the November FOMC statement, and the data indicating a slower job market, said Joel Kahn. He's a vice president and deputy chief economist at Mortgage Bankers Association. Where is it? I saw you up here. There it is. Kahn, said Olivier. So it looks like mortgage rates are going down again. Basically, the economy is doing the Fed's job for them of lowering our rates. Applications to purchase a home rose 3% for the week, but were still 20% lower than the same week a year ago. The decline in interest rates still not enough to offset sky-high home prices, which I just don't think it will. I don't see home prices tanking anytime soon. I see home prices just kind of leveling off, but I don't think they're going to tank. I saw Marty. Hey, Marty. Marty Reinhardt's here. He said, also feel agents who are busy are innovators and creative who are being consistent online and creating dope content. I guess you were talking about what we were talking about with the agents moving around, switching brokerages. What's up, dude? Agreed. Peggy agrees. What did you agree with? Hey, look, Bushy's back. What's up, Bushy Top? Thanks for joining the show. Dusty said that and nice areas are usually nice and hold their value better in downturns. She said ours have leveled back to normal 1 to 2% appreciation year over year. In our area, I think it was like 3% ish was kind of normal in our area. So that 3% appreciation was a figure that we kept seeing over and over. 2% would have been a super conservative number. Oh, Peggy said that she agrees because home prices aren't going to be tanking. They're just going to be leveling off. Thanks, Peggy. You guys in the chat, tell people where you're from. I did have somebody reach out. So every now and then, the reason why I say tell everybody where you're from is because there are consumers that watch the show. I just got a message the other day. I need to keep these messages, but someone was like, "Thank you so much for the show. We watched it the entire time we were shopping for a house and it helped us make some decisions." I'm like, "Oh, great. Thank you." And there could be somebody watching now that's looking for an agent in your area and you're in the chat. So you need to drop it. There's Bushy Top, Miami. And Benito, Ami. Isn't that a song? All right. Anyway, rates are falling. On news of the soft job market, rates are falling. Rates are falling in October. Jobs report shows slower than expected growth in the labor market, which has already pushed interest rates down and driven mortgage rates to 7.36%. The labor market report comes out last week, has already brought a few pieces of good news. Let's see. The numbers point to a cooling job market in October. 150,000 jobs are created nationwide. That's fewer than 180,000 expected. But auto strikes subtracted 33,000 jobs. Interesting. So the report would be right on target without the strike. U.S. unemployment rate increased to 3.9% from 3.8%. Slight uptick. Is that auto strike over yet? Somebody pipe in the chat. Is that done? Have they gotten an agreement? I don't really follow that whole thing. All right, rental market tracker. We're making like really good time. For having 20 articles today, we're making really good time. I guess it's because we don't have all the discussion happening from Clubhouse. Sorry, guys. I still haven't figured it out. And I haven't been invited to anyone's room. What's up? I know it's a lot to ask. Our rental market tracker. U.S. asking rents have remained sluggish in October amid rising vacancy rate. So an increase in vacancy rate and a slowdown equals a slowdown on the rent numbers, right? You're not going to see rents continue to climb high when there's fewer occupied rentals. Median U.S. asking rent in October was $1,907. That's down 0.3% from a year earlier, but down 3.7% from the high seen in August. You remember in August, we were talking about how you could rent in Hawaii or you could rent in California for almost the same rate. Well, it looks like some of these rents are going back down, dropping back down now. Rents in Phoenix have pulled back, said local Redfin bureau agent Heather Corley. During the pandemic, you'll see 5 p.m. for the same unit, and you're not seeing that anymore. So rentals are sitting on the market longer. Landlords are willing to work with tenants for lease terms and conditions. We're also seeing that. We're also seeing that in the new homes market, where you're seeing a lot of people that are getting concessions from builders. Melissa Mara said the strike is unofficially done. They have an agreement, but it isn't set in stone. She said, we just had one of the local electric companies go on strike. Oh, man. That's bad. Hopefully you'll be able to stay with us the whole show. You won't lose the electricity. Stupid, I know. And then this last report. This is what not to do. So interestingly, I'm always curious to see what goes viral, what doesn't go viral. We put out a bunch of clips of the show. And one of the things, wait, I'm about to all right, I had to stop that. One of the things that went viral was the Barbara Corcoran discussion and how she said now's a great time to buy because as rates go down, if rates do go down, then home prices are going to skyrocket. And everyone was like, oh, that's terrible advice. So I love the trolls. Like it brings me joy to troll a troll. So I'd always say, oh, okay. So you would say wait to purchase until rates are higher. They'd say, well, no, that's not what I mean. Like, well, what do you mean? Like, that's the alternative. You're coming out saying she's wrong. But if you look at the alternative, you're advising that people wait until rates go higher before you buy. This is dumb. So that went viral. Another thing that went viral was the story I did about the handyman that figured out a way to get the squatters out of the house. You all remember this? There was a handyman whose mom owned a home, and because she was the owner, the squatters were in there. The squatters have rights that are kind of like tenant rights. And the squatters' rights are there to prevent a tenant from, or a landlord from kicking out a tenant who legally does have a right to the home. So those rights somehow have been interpreted to protect the squatters. Because those squatters have rights and tenants have rights, the guy said, aha, I will legally rent the home from my mom, wait until the squatters leave, and then I will go in there as the tenant, take all their stuff and move it out, change the locks, lock the doors, and say, I'm a tenant. I have rights. You can't come in this house anymore. So that's what he did. And it all kind of passed the sniff test. And now he does it as a profession. He will rent your home for you and get the squatters out of the house. And so that went viral. And a lot of the people were in the comments saying, this is not a real podcast. This didn't happen. And so I was just like pasting the link to the articles, like, well, here's several articles. It was weird to me that they were like, this never happened. And it did happen. Like it's a well-known article. The guy has his own YouTube channel. He videos his stuff. Okay. So that went viral. Well, this one, I hope it doesn't go viral. It's just a bad move. Landlord torches New York home after tenants stop paying rent and become squatters. This is not the way to do it. This one you don't want to emulate. It happened on Forbell Street, 5:15 a.m., September 26th. Authorities allege that the landlord, Rafiq Islam, lit a fire in the stairwell. The family was still in the house. 911 was called, reported seeing smoke. There were 2 adults and 6 children. They all escaped. But the landlord is, of course, in big, big trouble. He faces more than a dozen charges, including 8 counts of attempted murder. Crazy story. I mean, there are ways to legally go about getting tenants out, but I mean, I can understand a lot of landlords are frustrated. We have investors that have told us about the frustrations of people squatting in homes for, years and years and years, 15, 20 years. I can understand that it's frustrating, but that's not the way. That's not the way to go about it. Let's see. Bushy Top said worked for me earlier this year. I assume you're not talking about. I assume you're not talking about this last story. Sorry, I took those out of context on purpose. Bushy Top said, one thing on getting financing for your home, if you need a down payment, I'm not sure how many people know this, but you can borrow from your 401k, use those funds over the 10K that most people think. And it doesn't count against your debt to equity ratio. And Bushy Top used that. That's what they're saying worked for me earlier this year. Well, I used to sell businesses as a business broker. And one of the things you could do is borrow from your 401k or pull money out of your 401k without penalty to purchase a business. I'm not sure if that is still there. But I have helped someone do that to buy a portfolio of real estate properties. They bought the business that held those properties, therefore also buying the assets that company holds. So it's definitely a way to do it if you want to. All right, I'm going to go through the comments. What's up, Janice? Janice says Clubhouse has glitched since the time change. Yeah, pre-scheduled rooms have disappeared and everyone is having trouble. Well, it looks like the 15th, the next week, is going to be there. So whenever we return next week, we should be broadcasting on Clubhouse at the same time that we are broadcasting on YouTube. Peggy, what's up, Peggy? She's in Western Philadelphia, suburbs of Pennsylvania. So you're in West Philadelphia, born and raised? Sorry. Tell me if that's right, though, because that would be, and I don't know why you wouldn't be using that. Oh, and Janice is in Ohio. What part of Ohio are you in, Janice? All right, thanks, guys. That's all I got for the show today. Tons of articles. We covered 20 articles, and it took us about 50 minutes. That is not bad. Hopefully next week we'll be broadcasting back on the Clubhouse. Sorry for those of you who wanted to chime in and couldn't today. But thanks for all the discussion. Thanks for popping in the comments. I appreciate you guys dropping by. Covered a ton of stuff. Next week is The Real Broker. They announced their earnings tomorrow. I tried to get it moved to today just so I could cover it, but I don't have the right contacts. But anyone else that has not reported earnings, we'll get them next week. Should be a much shorter list. But if you have articles and you're like, why didn't he cover this article? Send it to me. Find me at Razorback. That's RAYZORBACK. Find me on Instagram and shoot me a message. So any articles that you find, just shoot me a message. And I plan on having like a little broadcast channel on Instagram just for those of you who are interested in what news is coming, what we're going to be covering, and like a little pre-discussion before we actually do the show. So if you're interested in that, let me know. But thanks everybody for coming, and I will see you next week.